Hi everyone, welcome back to my YouTube channel Manu Issue ACCA classes. So in this video, I will be discussing further more question of Kaplan Kit from financial accounting, and this is from the double entry system. Previously we had covered approx introduction to financial reporting chapter question from the Kaplan Kit. So in this video, we will be continuing the rest of the question from the double entry system. Alright, so if you are watching my video for the first time, do not forget to subscribe my channel and share it among your friends so that they could also have benefit, right? Alright. In case you have been missed out my previous video, you can still access it from the playlist available on my YouTube channel, and it's free of cost. All right, okay, so let's start today question. Okay, so from today we will be starting from 67, right? So what the question says, Salal received a document from Kulin Stationery Supplies for 8 reams of paper, which they supplied 3 previously. So basically they are sending a document. Previously they have been supplied 8 reams of paper, and they had the same document related to the same item to the Salal, right? So basically the question is asking how would Salal refer to this document. Okay, so let's start evaluating the each option. First option is it is a good receipt note. Basically good receipt note is issued by buyer, right? And in our case is Salal. When they receive good, right? Whenever they receive, as mentioned in the question, they had supplied 8 reams of paper. Who had supplies? Kulin Stationery Supplies, right? Sorry, Kulin Stationery. So basically, when the Salal has received these goods, they have issued good receipt note, and it's an internal document. Right, in the good receipt note, they used to note down the quantity, condition of the good received. Okay, but in our case, the Salal is receiving a document from supplier, and who is Kulin Stationery, not issuing a note. So this is not a correct option. Okay, next option, receipt. Basically, receipt is a document provided after a payment have been made to confirm the transaction has been completed. So in our case, as Salal has received the good and they have received other document, if the Salal has paid the amount, in that case, they will provide a document called receipt, and basically after making a payment, okay, to confirm that the transaction has been completed. Okay, but in our case there is no such mention the payment yet, so it is also incorrect. Next, it is a purchase invoice. Basically purchase invoice is a document sent by supplier, and in our case supplier is stationery, Kulin Stationery, Kulin, right? And who is the buyer? Salal. Okay, so purchase invoice is a document sent by Kulin Stationery to the Salal. Why? Because it details the goods supplied and the amount owed. Since Salal is receiving the document from for the 8 ream of paper from Kulin Stationery, and this fit the description of the purchase invoice. Alright, let's move to the option D. Credit note is issued when there has been overcharge or when goods are returned. Okay, so basically option D is saying the credit note. Basically it is issued when there has been overcharge, or when basically when Salal has received the defective piece of the paper. In that case, Salal will return the good to the Kulin Stationery, right? And in that case the credit note is issued. Okay, and this note is issued to reduce the amount owed by the buyer, means Salal. Okay, so since this situation involves receiving the goods, so credit note is not applicable here. All right, okay, let's move to the next question. What is the principal document used to record petty cash transaction in the petty cash records? So let's evaluate the option. Option first is saying an invoice. So invoice is document used for billing a customer for the goods or services, but it is not typically used for recording the petty cash transaction directly, right? And while an invoice may be related to the petty cash purchase and not a principal document for the petty cash record. Okay, so this seems to be incorrect. A till receipt. It basically till receipt is a evidence of purchase made, but it is not specifically used to record petty cash transaction. It can be attached to the petty cash voucher to support the expenditure, but it is not the main document used for recording. Right? Moving to the next, a petty cash IOU. So petty cash IOU is a note used when someone borrows cash from the petty cash fund, promising to pay it back, right? So it is not a principal document again for recording the transaction in the petty cash record. Now last option is the petty cash voucher. A petty cash voucher is the primary document used to record transaction in a petty cash system, and it will details the amount spent, the purpose of the expense, and it is often signed by person responsible for a transaction. So it is a principal document for recording the petty cash expenditure, right? So this seems to be the correct. Okay. Moving to the next question. Which of the following is a source document for financial transaction? Let's evaluate the option. First is statement of account from supplier. Basically, statement of account is a summary provided by supplier and showing all the transaction, invoices, payment, balance over a period. So it is not a source of document for the financial transaction, right? Because it summarizes the past transaction rather than recording an original transaction. So it might be help in the reconciliation, right? Okay. So next option is B, paying in slip. Paying in slip is a document used when depositing money, might be cash or check, into the bank account. So obviously it records the details of deposits such as the amount and source, making it source of document for recording the financial transaction. Okay, so because it provides evidence of the transaction. Okay, whenever someone goes to the bank, they deposit the cash and slip, they will get the paying in slip in return. So that transaction need to be recorded in the financial transaction, right? Because we have been paid into our bank account. Okay, so B seems to be correct. Let's move to the other option as well. Option C, delivery note. A delivery note accompanies, we can say, basically it's a document that basically it is not, it is issued when the goods are delivered, right? And it shows the quantity and description of the good received, but again it will not be the source of document for the financial transaction, because it does not record the financial transaction. So it is issued when the goods are delivered, right? Another one is good receipt note, option D. It is prepared when goods are received into the business, confirming what has been delivered, right? So while useful for tracking the inventory, it will be important, but it will not be the source of document for the financial transaction. Okay, as it does not record any monetary amount. So option B seems to be fit here. Let's move to the 17 number question. Nikki runs a sole trader business selling computer. On 12 January 20x7, Nikki employed a family member as an administrator for the business and took a computer from the store room for their use in the office. So first option is saying drawing debit credit cost of sales. Second one is debit non-current assets credit cost of sales. And C is the debit cost of sales and credit drawing. And D is debit cost of sales credit non-current asset. Okay, cool. So as per the question, Nikki takes a computer from the inventory, right? So being inventory, it's a part of cost of sales, right? And for you, and why she take out this computer for use in the business, right? And so if they are taking out computer from the inventory, and inventory is a part of cost of sales, so it means it will computer is no longer being considered as a part of inventory first. So we need to reduce the inventory part, right? And to reduce inventory we need to credit inventory. But here in each of the option you can see the cost of sales, right? So it means we need to credit cost of sales, okay? Because if we will debit the inventory it will increase the inventory value. If we will credit the inventory it will decrease inventory value, right? So in order to decrease the inventory we need to credit cost of sales. All right. So by till date we have known that the last two option is no more use. So answer might be A or B, right? So now coming to the other part, debit, what will be on the debit side, whether it will be drawing or non-current asset. Let's evaluate. So computer is being used in the business, not they have not taken it out from the personal use. If they have been taken out for the personal use, in that case it will be drawing, and option A seems to be correct. But in our case, computer has been taken in order to use in the business, right? So it becomes a non-current asset, a office equipment for the business. So in debit side, the computer is now being used as an asset for business, so it will be recorded as non-current asset category. So option B seems to be correct. Moving to the next part of our question, which of the following pairs of item would appear on the same side of trial balance, right? So first one is option A, drawing and accrual. So drawing is also one kind of expense, right? So it will be on debit side, and other one is accrual. Accrual means that if we talk in the case of an expense, in that case accrual expense means the you have taken the service or the goods but you have not been paid the amount, so it's a liability, right? So it will be on credit side. So option A is not correct. B, carries outward is some kind of like you are, it is expense, right? And prepayment is also paying any amount in the advance, right? So it will be also on, it is an asset and it will be on the debit side. So both are on the debit side, so option B seems to be correct. C, carries inward, again it's expense, like it's like a you are just taking a those transport system to get your goods delivered, right? Inward means into your organization, outward means outside the organization, right? So it will be on debit side as it is expense, and other one is rental income, it's on the credit side obviously. So option C seems to be not correct. And D, opening inventory obviously on the debit side. Purchase return will be on the credit side, because if we are purchasing the goods it will be on the debit side, but now we are returning, so it will be on the credit side. So option B is correct. Next question. The double entry system of the bookkeeping normally result in which of the following balance on the ledger account? Double entries normally result in the which of the following balance in the ledger account? Okay, so basically in debit side we will have asset and expenses. Revenue will be on the credit side, so it's incorrect. Again they have taken the expenses on the credit side, it is incorrect. B, revenue, it will be on the credit side, capital will be also on the credit side, and liability will also be on the credit side. So they have just done the vice versa. Option C, asset and expense on the debit balance, liability, capital, and revenue on the credit balance. Yes, this one is correct. Okay, and in the option D, they have put the capital on the debit side, so it's incorrect. Next question. Which of the following entry would be required to account for reimbursement of petty cash float of 125 from the bank account? See, as we are taking amount from the bank account, so bank account will reduce, and bank account reduce means it will be on the credit side, right? So option A or D might be the correct, and B and C has been eliminated, right? So now whether it will be A or D, let's evaluate furthermore. So obviously amount has been petty cash concept. I must assume that you guys know about this. So it's not for the personal use, right? If it is for the personal, in that case we will put the drawing. But it's like for the business purpose, for a small expenditure, we are taking out the money. So obviously debit will be on the on debit side. It will be the petty cash, not the drawing. It is straightforward, right? Okay, let's move forward. 74. Sam prepared a draft statement of profit or loss for the business as follow. Okay. Oh, so they have sales, cost of sales, opening inventory, purchase, closing inventory, gross profit, expenses, net profit. Okay. Sam has not recorded the following item: carries in of 2300 and discount receive of 3900, carries out of the 950. After these amounts are recorded, what are the revised value for gross and net profit of Sam's business? Okay, so we need to open the Excel. Let me open the Excel first. So hope my screen is visible. Let me zoom little bit more. So I think it's okay, right? Okay. So now we have a sales, and sales amount is, let's do from beginning, 256,800, right? Then we have a cost of sales. In cost of sales we have a opening inventory of amount 13,400, right? Then we have purchased the goods, purchase, and purchase amount is 145,123. Then we have closing inventory of 4,200. And if we will add up this all, we will get alt plus. Okay, so you want to learn a Excel shortcut key? I'm uploading the video as well. Just go to my YouTube channel and the playlist of the Excel. You will find lots of video for the Excel. So Excel your Excel from the Money Issue ACCA classes. Alright, so now we will have a GP, gross profit of okay, so then expense, right? Okay, so it is 76,000. Okay, then we will have a net profit all plus. Okay. Okay, so this is as per the question. And now what the question says that Sam has forgot to record this transaction, and we need to record this transaction, right? The first one is carries in. So basically carries inward, carries in, or carries outward, or carries out, right? So basically carries in is when we are buying the goods, and whatever the freight charges that are incurred when receiving the goods, it will be the carries in, and it's also expenses, so we need to add it. So carries in, and amount is 2300. Okay, then we have a discount receipt. So this discount might have been received while we are purchasing the goods. So we need to reduce it from there. And what is the amount? 3900. Okay, so then we have a carries outward, and carries outward is basically when we are sending the good to our customer, and this expense will be incurred. So it will be not direct cost. So carries out. So it will be added back 1950, right? Okay, so let's add all these. This is perfect. So now we have a GP margin of 114,200 and net profit. Something we have been missed out, I think. All right, the Excel didn't took the last one. Okay, so according to my calculation, option D seems to be correct, right? Okay, so let's move to the next question. How much is left? Oh God, it's very long. What I can do is, let's stop the video here, and it's very long, up to 101, and we are at 79. Let me check. Okay, 74. Okay, do few more question. Okay, 75. Fran started a month with a cash at bank of 1780, which was carried forward after accounting for the following transaction in the June. So what is the balance carry forward? Okay, again we need a help of the Excel, right? Let me open the Excel. Alright, so I had opened the Excel. Let's do the calculation. This one is 75. So at the start of the month with the cash at bank, so I mean opening balance, or we can say brought forward balance, was 1780, right? And what was the balance carried forward after accounting for the following transaction in the June? So Fran withdraw per week to cover the living expenses, and then it will be less. So it's a personal expense of Fran, right? We can say it as a drawing. Spelling mistakes. Okay. Then what is the amount? They say 200 per week, right? And we are calculating the carry forward balance for the month of June. So in 1 month, how many weeks? 4. Okay, then customer paid for the good with a list price of 600 less trade discount of 5%. So amount received from customer, right? It is, so I'm doing the roughly calculation, right? So for your understanding, you can solve this like I'm doing, or you can make a laser balance if you feel comfortable. That will also be okay. But in exam, you don't have a much time to take out your pen making the laser. So it will be better if you will doing like this. So from customer, how much we have received? 600, and after discount of 5% means 95%. Okay, 570 we have received from the customer. An amount of 400 was received from the credit customer. So from credit customer we have received 400, right? And banking of 1200 from canteen vending machine. So banking 1200. So carry forward amount is, oh, Okay, it's 3150. Okay, or you can make a ledger like this where you will have a opening balance. Being a bank account, it will be on the debit side. On the credit side, we will only have a drawing because it is reducing our bank balance. So this is all about the calculation. Okay. Okay, then next we have, after correction, what should be the balance on the following account? What the correction they made? Overdraft at the start of the month. Okay, so they have done few mistake over here, and we need to find out what will be the correct balance after correcting the all of the item, right? So what the first mistake they did is, our bank balance is opening balance is always on the debit side, right? But overdraft means you have a negative bank balance, and opening bank balance is negative, it means it will be on the credit side. So we will simply, what will we do? Overdraft, we will take it on the credit side, 1340. Then next we have reimbursed PT cash float. Reimburse PT cash flow 45. So it means you are topping up your PT cash balance. So again it will reduce PT cash reimbursement. So what is the amount? 45. Again it will be on negative. I mean credit side. Okay. Then we have receipt from the customer. Receipt from customer. Right. What is the amount? 4500. Then we have return of goods purchased for cash. So now if we are returning the goods, so while purchasing we might have paid the amount. Now we are returning the goods. It means that amount should be paid back by supplier. So we are receiving. So what is the amount? Re, re, Let me copy from here. Return of goods of cash. So it will increase our bank balance, right? So 50. The next have credit payment to credit supplier. So now we are paying our supplier, payment to supplier. So it will reduce our bank balance, 90. So I had kept it in the minus. So now rental income. If you are receiving the rental income, they are saying rental income, not expense, right? If it is expense, and it will be on the credit side, but they are saying the income. So we are receiving in the bank, and our bank balance will increase. So it means positive. Positive means debit. So what is the amount? 1300. Then next we have payment to electricity bill. Electricity bill. What is the amount? 700. Because we are making the payment and it will reduce our bank balance. So our balance that should be carried forward is 2775. Okay, and you can do the same question in the laser format as well, but as I said, in exam you don't have a much time, so I will just say to prefer my approach, right? So if you are uncomfortable, because as you are just started your ACC journey, you might be uncomfortable, so for practice you can do the same. What you can do is, okay, so this is bank laser, right? This will be debit side and this will be credit side, right? And one more thing I am missing out is, just wait. Okay. Okay, so So overdraft balance should be on credit side because our bank balance is negative, right? And the amount is 1345 1340, right? Okay, then we have reimbursement of petty cash float. Okay, so we can copy it from above as well. Reimbursement of petty cash. Okay, again it will be on the negative side, 45. Then received from customer, it will be on the debit side. Received from customer, right? What is the amount? 4500. Okay, then we have return. Okay, then we have return from the goods purchase for cash, right? Again it will reduce our, sorry, we had made the purchase earlier. Now it will increase our bank balance and the amount is 50. Then we have payment to the credit supplier. Payment, okay, we are making the payment, so it will reduce our bank balance, right? And then amount will be 990. Okay, then we have a rental income. Rental income will increase our bank balance. Amount is how much we have received, 1300, right? Then we have payment to electricity bill. Obviously we are making the payment, so it will reduce our bank balance. Again it will be it will increase, it will reduce our bank balance. Then okay, perfect, all done. So adding up all this, we have a 3075, and adding up here we have a 5850, right? So how much balance should be carried forward? I mean, how much we required? We can say carry forward 2775. Yeah. Okay. Okay, perfect. So you can solve this question in the ledger format as well. It's your choice, right? So up to this much, I mean this 76 we will do in the current video, because video is half an hour long and it will be difficult for me for to retrieve if it will be more longer. So thank you so much guys for watching my video. If you find it useful, please share it among your friend and who is pursuing the financial accounting. They have started their journey, make their journey smooth. Okay, so hope you have been liked. In case you have been missed out my any video, you can still access it from the playlist available on my YouTube channel. So thank you so much and have a good day.